presentation contains current opinions of Moe Ansari, Chief Investment Officer of Compact Asset Management, a registered investment advisor, and are subject to change. Nothing in this presentation should be considered investment advice. We make no assurance that Moe's opinions or illustrations will accurately predict future prices or financial markets. In no event is past performance a guarantee of future performance. A detailed disclosure can be found at the end of the presentation. And now here's Moe.
Hello everyone, and welcome to the Compact Market Wrap YouTube update for January 21st, 2025. I'm Moe Ansari, President of Compact Asset Management, and thank you for joining me today. Don't forget to click on the subscribe button, and that way whenever I post an update you will be notified and you can see all the charts and everything we talk about. And don't forget to subscribe to the podcast, which Javed and I do on a weekly basis, a lot more detailed view of what I will talk about right now. Last week, wonderful week in the markets, S&P up 2.93%, small caps up even more, NASDAQ was up 2.45%, Dow was also had a good day, up 3.67%, small caps up 3.97%. Why? Interest rates came down, that helps the broader market, technology taking a breather, and I think that's going to be the case going forward. Energy was the best sector last week. We also saw financials have a great week, up 6.1%. Even healthcare was up 0.4%. Every sector was up, so it was a wonderful week in the markets. Inflation came in lower than expected, and that take away the narrative of, oh my God, interest rates are going up because inflation is going up. Well, inflation came in lower, so now everybody's scratching their head saying, why did interest rates go up? I think interest rates went up because the economy is doing really well. When the economy goes well, yeah, it puts up a little bit of upward pressure on rates, and now rates have backed off from nearly 5%, which was the high in October of 2023 for the 10-year note. Now we're down to about 4.5, 4.57 today. So with that, took a lot of pressure off the small caps. They went up, Dow went up, and we saw financials really do well. Last week we saw the oil market up. It's back down big today. The big news again was interest rates going from 4.7 to 4.61. That was the big move that we saw to the downside. Last week we saw also high yield do very well, which is a sign of how well the economy is doing. When the high yield starts to suffer, that means the economy, they're worried about companies that do not have good credit, and those could go bankrupt, and that's why high yield yields go up and they go down. But the high yield, even with this correction in December, when we saw a pullback in the market, it was no big deal. Again, people are very optimistic. I think that inflation overall could go up a little bit. I still think that is just a slight expectation. I think with shelter coming down, that will bring inflation down in the longer term. Very light economic week this week, not a lot going on as far as economic data. The big news will be next week when the Fed meets for the FOMC. Expectation is no change in interest rates, but what they say will matter, and I think the news conference after the meeting will tell us what the Fed is thinking. I think they're going to say, look, we're on hold until we get some clarity on tariffs and on the deficits, on taxation. What is the new administration going to do? And again, I don't think a lot changes. We are going to see some tariffs, which we saw the last Trump administration, which was deflationary, not inflationary, as long as there's smaller tariffs, selected tariffs, and that's the way it's going to be. As far as taxation goes, I think that'll be a longer-term process. Will take some time to see. Looking at the technicals, we are above the 50-day moving average. That is the blue line right here, which is 59.73. We are above the 20-day moving average. And target is really, I was looking at the projection, it comes up way up here to 6,300 for the fifth wave top. Looks like we completed the fourth wave. We'll have to wait and see. If we get there on the weekly charts, we're seeing a target of somewhere around 6,200. So we'll have to wait and see if we get that. We're above the 20-week moving average. We got below it here, but closed above it. Again, last time we saw that was, about a year or so ago. In April of last year, we went below it, came right back above it. And that's what we've seen. As long as we stay above the 20-week moving average, we see a test of it, we saw a test of it, but those turned out to be buying opportunities. When we break below it, that was the October low of 2023, and I don't think we are there. We broke below it, but came right back up this last week. NASDAQ looking a little bit better, about 20,500 becomes the target on the upside, the Fibonacci projection there. We're looking at the weekly charts, we're above the 20-week moving average, above the 50-week moving average. But I think we pulled forward a lot of growth in the tech stocks, and might need some time to digest the gains, the huge gains we've seen over the last couple of years. Interest rates weekly chart. This is the high in October 2023. We went and tested it, got close to it, fallen off now, and we are about 4.57 today. On rates, back down from 5. Big number to watch will be 4.25. I think we stay between 4.25 and 5%, go up and down for the next few weeks, months, until we get some clarity on tariffs and inflation. Small caps had a good week, tested the 50-week right here, moving average. The blue line came and tested it, popped right back above it today. We are above the 20-week, but the breakout point is 245. We've got to get above these big highs that we've made over the last 3-4 years. Until we get that, we're just in a sideways pattern. Oil down big today, gold nothing very exciting going on there. So those are my thoughts, those are my observations for this week. Again, if you'd like to subscribe to this channel, just click on the subscribe button. Whenever I put an update, you will be notified of that there's a new update there, and you can see the charts. I will be back with you next week. Until then, good trading.
This presentation contains the current views and opinions of Moe Ansari, Chief Investment Officer of Compac Asset Management, a registered investment advisor. The views expressed are current only as of the date of this presentation and are subject to change. Nothing in this presentation should be considered investment advice, and nothing is personalized to any investor's individual circumstances. Compac Asset Management offers investment advice only after entering into an investment advisory agreement and gathering client-specific information about goals, objectives, financial status, and risk tolerance. This presentation uses terminology associated with technical analysis and provides charts to illustrate some of the concepts discussed. Technical analysis is a security analysis method with the goal of forecasting the direction of prices of securities or market indices through the study of past market data, primarily price and volume. We make no assurance that past performance or the use of technical analysis will accurately predict future prices. Further, a risk of technical analysis is that over-focus on historical patterns could lead to ignoring or downplaying security-specific concerns, overall market or sector concerns, or other factors because we assume inaccurately that historical patterns will repeat themselves. In no event is past performance a guarantee of future performance.